Good morning, Steve Free in Chicago with the morning grain comps. Have a mixed trade with beans and corn a little bit higher and wheat lower. The big news overnight, it looks like the U.S. has avoided a rail strike with the railroads and the unions coming up with a tentative agreement. It would have cost the U.S. economy about $2 billion a day from lost revenue because of the strike. We also note that we finally get some export sales data from the USDA FAS today. Wire services have been running surveys for every week that the USDA has been down. They come up with a guess for today of in wheat 900 to 2.2 million tons, or 33 to 82 million bushels of wheat sales over the last 4 weeks. Corn 1.7 to 3.4 million tons, or 67 to 133 million bushels. Beans maybe 2.5 to 5.3 million tons, 91 to 194 million bushels. Still, in the wheat market, Russia prices are cheaper than U.S. Number 2 in corn, you've got Brazil, Argentina, and Ukraine all cheaper than U.S. And in beans, for the most part, Argentina beans, meal, and oil are cheaper than U.S. We're also concerned about China economy, relations between U.S. and China, with the administration considering new sanctions against China, that they will avoid trying to buy future U.S. beans from U.S., especially if South America has a good 2023 soybean crop. The 2-week forecast for much of the Midwest is warm and dry, which should help mature the corn crop and continue to advance harvest. We'll see if that begins to fill the pipeline, with bases strong right now, as farmers are reluctant sellers of corn, even at these prices plus the higher basis levels. Ethanol production was down 2%, while stocks were up 14%, reflecting maybe a slowdown in gas consumption here in the U.S., because of the economy and threat of higher interest rates putting us into a recession. We also note that the funds are long, maybe 100,000 contracts. Beans, 90,000. Meal, 50. Oil, 220. Corn, and maybe still short a little wheat. These positions are relatively low in a bull market, and we'll see what the funds want to do with concern about higher rates, inflation, recession, passively slowing demand, and normal 2023 crops also limiting increases in U.S. exports. Canada came out and said their wheat crop is going to be 34.5 million tons. USDA was using 35, last year was 22, and their canola crop almost 20 million tons. Last year was 13.7. So we'll look and see money flow, especially with the uncertainty of the economy and relations between U.S. and China and the Ukraine war. As always, these are my thoughts and not those of any ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.